I'm Akshat Malhotra. Welcome to the course on the fundamentals of personal finance. Well, if you've been watching all of these videos, by now you're all set with your savings, investments, the right money mindset, budgeting, financial planning, and even taxes. And now it's time to deep dive into mutual funds. Well, have fun watching these videos and don't forget to subscribe to the channel.
Do you currently invest into mutual funds? And if yes, what was the first thing you looked for while you were selecting a mutual fund? Was it the returns? Was it the star rating? Or did you just Google what are the top 5 mutual funds? What are the best mutual funds? Mutual funds that have given the maximum returns? Well, yes, I know majority of us do that. In fact, I used to do that too. But there is a lot more that you can do rather than just Googling these key terms. And so in this chapter, we're going to study about how do we go about analyzing the mutual fund, if that is the right one for us or not. Yes, 38 varieties, more than 40 plus AMFI registered AMCs, 45 I guess by now, 2,500 plus mutual fund schemes. Akshat, how do we go about choosing which one to invest in? Well, that's what we're going to just talk about now. So, a few of the parameters that you must look at are, oh wait, let me show that to you live, right? So let's do some technical analysis and open up this website called valueresearchonline.com. You could see the name here. And once you open this website, you could go to the funds tab. It's a free website, free to use research website. Go on to the funds tab and then scroll down. Scroll down to the bottom where you see these fund category returns. Okay. And the first step, choosing the category. So once again, the same goal that I have, daughter's education, 10 to 15 years, 1 crore is what I need. So I have a moderately aggressive risk appetite. So I'll go for a large cap mutual fund. That's what I'm choosing based on my risk appetite, based on my time horizon. It could be different for you, okay? It could be different for you. So based on my understanding, let me go for an equity large cap, and you see all these listed on the left side. So I'll click on the first one, equity large cap mutual fund. Okay. And there you go. This has filtered on all the equity large caps from various AMCs that are available. They're right now sorted in the alphabetical order. And here you see on top few of the tabs: snapshot, returns, portfolio, risk stats, so on and so forth. And I'm pretty sure you must be wanting to get into the returns tabs to see how much have these funds generated in return. But wait. Before looking at the returns, let's look at the risk stats. How much risk this fund manager has taken, or this mutual fund company has taken, in order to provide us the returns. So we'll go on to the risk stats. And here you see there are a number of stats mentioned. The first one that I'd like you all to look at is standard deviation. Standard deviation. Now, what is standard deviation? Standard deviation is the measure of the risk this fund manager or the mutual fund company has taken in order to provide us the returns. Standard deviation is the risk that the fund manager or the mutual fund company has taken in order to provide us the returns. Okay. So what we're going to see here is the one with the highest standard deviation. That mutual fund manager has taken the highest risk. The one with the lowest standard deviation, that fund manager has taken the lowest risk. And so let's write these down. Let's take some notes. I'll pull up my notepad, pull up a pen, and let's write this down, right? If we sort this, the lowest is 10.88 and the highest is 27.22. So the range of standard deviation is 10.88 to 27.22. Okay. Now, wait a minute. And let's jump to the other parameter. I'll come back to standard deviation and how do we go about looking at it. But let's jump to the other parameter. And the next one is Sharpe ratio. The next one is Sharpe ratio. Now, Sharpe ratio is the measure of the reward that this fund manager has generated, or this fund has generated, associated to the risk that they have taken. Sharpe ratio is the measure of the reward that this fund has generated against the risk that they have taken, right? So what we'll do is we'll look at standard deviation Sharpe ratio together, but before that, so the mutual fund with the lowest Sharpe ratio, 0.46, and please don't look at the FOF or the ETFs. These are different kind of funds. We'll directly go and look at the mutual funds, the regular equity mutual funds, no fund of funds or ETFs. Okay. So let's look at these, and I hope I looked at the right one in the standard deviation as well. Yes, 10.88 and 27.22 was FOF. So let's take this one, Nippon India, right? So 24.69. Okay. So just go back a bit once again. I'm sorry. Standard deviation range goes from 10.88 to 24.69. Okay. And now let's come back to Sharpe ratio. The range of Sharpe ratio goes from 0.46 to 1.02. 0.46 to 1.02. So the one with 0.46 as the Sharpe ratio has given the lowest return, the lowest reward. The one with 1.02 as the Sharpe ratio has given the highest return, the highest reward. Okay. And now we'll look at both of these together, and you could look at this table that I've created for you. Increase it in size. So how are we going to look at standard deviation and Sharpe ratio? For high standard deviation, if the standard deviation is high and Sharpe ratio is high, it is actually good for people who want to take risk, high reward. Okay. Let's say standard deviation is high, but Sharpe ratio is low, which means high risk but low return. Would anyone want it? No, simply avoid such mutual funds. Straight away take them out. Standard deviation low, Sharpe ratio low, good for people who want to take moderate risks. And what would be the best fit? Sharpe ratio, standard deviation low, Sharpe ratio high. Good, best fit, good for people who don't want to take too much of risk, but at the same time want great rewards, right? So low standard deviation, which means low risk, but high Sharpe ratio means high reward. And that's how we're going to look at into the mutual funds. We're going to find the one which has a low standard deviation but a higher Sharpe ratio. So let's start with looking at the highest Sharpe ratio one. So we see this is JM large cap with a Sharpe ratio 1.02 and a standard deviation of 10.88. Oh wow. So which means this fund has generated the maximum reward for the lowest return. Looks amazing. JM large cap 1.02 to 10.88. Please put it down in your notebooks. Let's look at the next one. We'll ignore the ETF. Let's look at this one, Canara Robeco 0.97. The Sharpe ratio is 0.97, once again on the higher side, right? 1.02 say just a little down, so once again on the higher side. But at the same time, the standard deviation is somewhere in the middle, right? 10.88 and 24, somewhere in the middle. So 18.66, pretty nice, pretty good. So 18.66 is the Sharpe ratio, is the standard deviation for 0.97 of Sharpe ratio. Let's look at one more. 0.96 is the next one, Axis Blue Chip Direct, 0.96. with 17.46 as the standard deviation. This was Axis, this was Canara. And let's look at one more. 19.3, 0.87, 18.25, 0.87. I see the Sharpe ratios are going down and the standard deviations are increasing. So they are moving away from our best fit category. So, no point really going into looking into those. So let's concentrate on the three funds that we figured out for ourselves: JM Large Cap, Canara Robeco Blue Chip Equity, and Axis Blue Chip Direct. For each of them, the standard deviation is on the middle side or on the lower side, and the Sharpe ratio is on the higher side. And so these fit perfectly well in the best fit window that we created, right? So there you see, from more than 2,500 plus mutual fund schemes, we are already down to 3 by just choosing the category, the standard deviation, and the Sharpe ratio. How cool is this, right? Let's move forward. The next one that we're going to look at is beta. Now, every mutual fund, the fund manager, when they start the mutual fund scheme originally, they choose a benchmark that they're going to follow. There are a number of benchmarks in India. So every mutual fund will follow a particular benchmark. Now, beta is the measure of how this fund has performed in comparison to the benchmark. So let's say, taking the example of these funds that we've shortlisted for ourselves, JM Large Cap, JM Large Cap, and then Canara Robeco, and then Axis Blue Chip. So if we see, the beta for JM Large Cap is 0.48. The beta for Canara Robeco is 0.86. And the beta for Axis Blue Chip is 0.77. Now, how do we read this? Let me take you to the table. So for every 1 point that the benchmark goes up, the JM Large Cap Direct Fund would go up by 0.48 times. Once again, for every 1 point that this benchmark goes up, JM Large Cap would go up 0.48 times. For every 1 point it comes down, JM Large Cap would come down by 0.48 times. Similarly, for every 1 point that Canara Robeco's benchmark goes up, the Canara Robeco fund will go up by 0.86 times. For every 1 point the benchmark goes down, Canara Robeco fund will go down by 0.86 times. And Axis, go up by 0.77 times for every 1 point, come down by 0.77 times for every 1 point. And how do we read this? So, when the market goes up, if your beta is higher than 1, then for whenever the market goes up, the gains are going to be higher than the benchmark. You'll make more money than the benchmark. But when market falls down, the losses are going to be also higher than that of the benchmark. The losses are going to be more than that of the benchmark. And so, this is good for people who can take risk. On the other hand, for the risk-averse people, if the beta is lower than 1, it means even if the market goes up, you will have gains, but those gains will be less than that of the benchmark. And if the market goes down, you'll have losses, but it will be less than that of the benchmark. And so this is good for people who don't want to take too much of risk. And so for the purpose of our understanding, I think if beta is closer to 1, it's good. So that, we could make sure that we're not taking too much of risk, or at the same time, we're also not taking too less risks, right? And so, you see, for JM Large Cap, the beta is too low, it's 0.48. But for both Canara Robeco and Axis, it's on the higher side, closer to 1, 0.86, 0.77, right? So maybe we could give one extra point to both of these here and then move on to the next parameter. And the last parameter that we're going to look at on the risk stats is the alpha. And alpha is nothing but the extra returns that this fund has generated over the benchmark. Alpha is the measure of the extra returns this fund has generated over the benchmark, right? So for example, JM Large Cap has an alpha of 3.95. So if the benchmark of JM Large Cap has generated 10% returns, then JM Large Cap has generated 13.95% returns. 3.95% above the benchmark, right? That's what alpha does. If let's say it generated 7% returns, this fund has generated 10.95% returns, right? 7 plus 3.95. Similarly, looking at Canara Robeco, the alpha is on a higher side. So if the alpha is 5.41, which means if the benchmark has generated 10% returns, Canara Robeco has generated 15.41 returns. And similarly, Axis also even higher, 0.01% higher, points higher. So if the benchmark of Axis has generated 10% returns, Axis has generated 15.42% returns. Nice. And with all these parameters, let's actually quickly also go and look at how alpha is read. So a positive alpha, it means it's outperformed the benchmark. A negative alpha, it means it's underperformed the benchmark. Yes, there are funds in which you have a negative alpha as well. Let's go down. Let's look at the worst performing mutual funds. So there you see this Bharat 22 ETF. Okay, maybe just JM Core 11 Direct. It has an alpha of minus 4.35, which means that if the fund has generated 10% returns, if the benchmark has generated 10% returns, this fund has generated 5.65% returns. That's bad, right? That's really bad. At the same time, it's on a higher side. The Sharpe ratio is also low. Bad fund. Please don't go and tell this to the GM people. They'll kill me. Right? So there you get the point. With standard deviation, Sharpe ratio, beta and alpha, you were already down to 3. And then even looking at these parameters, we see that the GM large cap falls short on the beta and the alpha. So maybe we could drop that. And then we could just move forward with the Canara Robeco and the Axis Blue Chip Direct Fund, right? And let's go and further look into both of them. So we'll open them in separate tabs. And let's look into both of them one by one. So once we've looked into that, all of these parameters, we'll go down and further look into the driver, the fund manager, right? It's important for us to see who the fund manager is and how the fund manager has been performing. So we see the fund manager for this fund is Sridatta Bhandwaldar. He's done a mechanical engineering with an MMS in finance. Definitely we can't look or learn so much about the fund manager by looking at their credentials. But yes, there are a number of funds that this fund manager is managing. Also, there's another fund manager along with Mr. Bhandwaldar called Vishal Mishra. He's also a BCom ACA, has more than 10 years of experience. So what we can actually look at is how has the fund performed post these fund managers have joined, right? And let's go and look into the performance. So this, the first one has joined in 2016. The second one has joined in 2021. So let's go and look at the graph of this fund. It's going to be on the top. And here you see. And one more thing, here you see S&P BSE 100. So this is the benchmark that this particular mutual fund is following. Canara Robeco Blue Chip Equity Direct Mutual Fund. This is following the S&P BSE 100 TRI benchmark. Okay, so you see two lines here. The one with the gray line is that of the benchmark, and the blue line is that of the mutual fund. And let's look at 2016 when this particular mutual fund manager had joined, the first one. And you see that over a period of time till 2019 mid, the fund was performing very similar to that of the benchmark. And after 2019 mid, around end of 2020, the fund actually generated, started generating more returns than that of the benchmark. So good. Over the last 2 years, it's been performing decently well, right? And even post, I know it's a very short time to see, but even post the second fund manager joined, 2021 mid, it's still on the higher side. But yes, the overall market is going up, so not much to see there. But yes, with respect to the first fund manager, we could see that the fund has made a has made a growth overall. So we could give a point to the fund manager. Second up, let's look at the top holdings. Are these companies known to us? Yes, ICICI Bank, Infosys, HDFC, Reliance, HDFC, Larsen & Toubro. All of these are known companies. It has 8% exposure in ICICI, 7% in Infosys, 7% in HDFC, so on and so forth. So yes, each of these companies look to be like known names. There are no unknown names that we have here. So, top holdings look fine. Let's further look into the expense ratio. How much is the expense ratio? How much is this fund manager charging me for these investments? So the expense ratio is somewhere around 0.37%. Pretty low, right? Pretty low. For all of this, they're just charging me 0.37%. Sounds good. And the total assets they're managing about 5,070 crores. Decent amount, 5,070 crores is what they are managing. Overall looks fine. And finally, when I've looked at all of these things, that's when I'm going to go and look at the returns that this fund has generated. You see, the fund has generated over a period of since launch, it got launched in 2013. The fund has generated 16.1% returns. Wow, nice, decent. Last 7 years, it's generated 14.86%. Last 5 years, it's generated 20.24%. I wouldn't want to see 3 years and 1 year, too short a period to judge the performance of an equity fund. But yeah, I think overall looks pretty nice, right? All of these parameters look to be fine. Similarly, let's quickly also give a look at the Axis Blue Chip Fund. This was the second option that we chose. We'll straight away go down to the fund manager. We see Mr. Shreyans Dewalkar since 2016, and he's the only fund manager. Let's see how he's performed. He's a BTech from Mumbai. He's done his PGDM management from Mumbai University. But at the same time, let's go and look at his performance. Let's look at the graph. And so we see, click on the all here. Again, this is also following the S&P BSE 100 try as the benchmark. And we see, in fact, since 2016, this fund has been beating the benchmark pretty decently. And in fact, over the last few years, the gap is quite significant, more than that of the Canara one, right? So in Canara, we saw the fund manager started beating the benchmark only closer to 2020, but here they have been beating since 2016. Nice. Let's go and look at the top holdings again. They have, they have a different set here. They have the maximum holding in Bajaj Finance, about 8.94 in Infosys, ICICI, HDFC, Avenue. So the top holdings have slight difference between the both. And definitely you could choose the one which has your favorite companies mentioned. Then let's further look at the expense ratio. So the expense ratio is 0.47%, which is slightly higher than Canara Robeco. But the overall assets are huge, 33,519 crores. Canara Robeco had just 5,000 crores, 33,000 crores. Now you'd be like, Akshat, how does that matter? It matters because they're generating or they're managing funds worth 33,000 crores, and even then their strategies are working. On the other hand, Canara is working on 5,000 crores, right? You could say in a class, if you're a teacher, you could say in a class of 1,000 students, managing 1,000 students versus managing 10 students, there's a difference. Similarly, if you're a manager in a corporate world, managing a team of 100 folks versus managing a team of 10 folks, quite a difference, right? And similarly, you could think of this reference as well. And now finally, let's look at the returns. The return since launch is 17.47%. The last 7 years is 14.69. Last 5 years is 21.43%. Pretty nice, right? Now I'll leave you there. I'm not going to give you a call because I know otherwise you're going to take my name and put all your money. The point, again, we have no affiliations with Canara, Axis or any third company. I'm just trying to teach you how do you go about technically analyzing mutual funds. And with all of these parameters in place, you could finally look at which one you want to choose for your goals, as per your risk appetite, as per your time in hand, right? Well, I hope this was helpful. This helped you gain some understanding on how do we go about selecting the right mutual funds. There are few more parameters that might create the difference in your decision, but to know those parameters, you have to attend the Mega Day. On Mega Day, I'm going to tell you a few more parameters that will help you make or break the decision. I hope I was able to simplify this chapter for you. If you have any questions, feel free to write them down and we could discuss all of them on the Mega Day. See you. If you have any questions, please add them in the comments below and I will make sure we answer them. Do like, share and subscribe to this channel.